Welcome back. Investors in North America are waking up this morning to more negative headlines on trade tensions and tariff tensions between the two largest economies in the world, the United States and China. China responding angrily to the latest pledge by Donald Trump to impose a 50% tariff on Chinese goods shipped into the United States. Let's talk to an expert in markets. Bipan Rai is Managing Director and Head of ETF and Structured Solutions Strategy at BMO Global Asset Management. And as you can see, he's in our studio right now. Thanks for coming in, Bipan.
Good to be here.
So in my conversation with CTV's Scott Hurst, I asked him, are there signs of cracks at all in terms of support for Trump and the tariffs? And you have said in some recent analysis of this situation, there's four things you're looking at in terms of where opposition to these policies may begin to emerge. And one of them is household sentiment. Why don't we begin there? U.S. household sentiment.
Absolutely. So we've already seen it tanking. If we look at some of the common sort of gauges we have for household sentiment in the United States, of course, the most prominent one is the University of Michigan survey. We've already seen a pronounced decline in sentiment and also in expectations going forward. You could make the argument, though, that some of that is partisan driven. But guess what? The market is the ultimate adjudicator of that. And the market doesn't distinguish between political parties. And again, sentiment at a household level tends to follow what markets are doing. And this latest sort of drawdown that we've had in the market since last Tuesday, we don't feel has been accurately or at least fully captured yet when it comes to household sentiment.
Seriously, I was going to ask if household sentiment tends to be affected by the markets. In interviews, which granted are anecdotal, media interviews, you sometimes hear U.S. people say, I don't care what happens to the stock market. I'm not invested. I don't care. That's for rich people.
Right.
You think there is a connection?
There absolutely is. I mean, certainly you can make the argument that, a minority of U.S. households are invested in the U.S. Equity market. But still, even if we do see a pronounced drawdown, it does matter in terms of funding costs for businesses. More prominently, or even if we broaden that out a little bit, if we're talking about the uncertain nature of these tariffs, certainly, investment and hiring plans also matter as well. So you take all of that into consideration, it absolutely affects everybody in the economy, not just those people who own shares.
What about businesses? I think one of the great hopes of investors is that large CEOs of big U.S. corporations will begin speaking up. And we're not too far away now from second quarter or first quarter earnings season in the United States. And other business groups, the U.S. Chamber of Commerce, which gets described as the largest business organization in the world, very early on said this was a very negative path to go down. So when might we see, do you expect to see U.S. business voices speak up?
Yes, I do. For the simple reason that, if we look at these tariffs, let's take it in two stages here. We look at the broad nature of these tariffs, right? It's not just tariffs against one country, much like we saw with Trump's first term and him targeting China. This is a broad-scale tariff, meaning that supply chains can't easily adjust to other countries. Trump, what he wants to do is completely onshore the entire manufacturing supply chain process to the United States. Unfortunately, it's part of the second stage here. That takes time and takes a lot of resources and money, and it doesn't happen overnight. So you're going to have to take a lot of the pain via the market downdraft, and also you're going to have a certain backdrop for business, again, when it comes to investing and hiring. And we feel that is going to make it, or at least the voices there that are prominent are going to make their voice themselves heard to the Trump administration.
Okay. What about congressional Republicans, people in his own party? The congressional midterms are still a ways away. They could be a very significant referendum on the first 2 years of the Trump administration. But what do you expect among congressional Republicans?
For sure. I think there's going to be pushback. I mean, we did have that symbolic bill in the Senate last week that did get bipartisan support. We've also had noted Republican stalwarts like Ted Cruz come out and speak against the Trump tariffs and warn about a potential bloodbath when it comes to the midterms in a couple of years. Those voices are going to get louder and louder the longer and longer these tariffs remain in place in their current form. So in our view, we think that the most likely outcome is going to be for a Trump put. Now, what form that takes, it could be many. It could be an extension in terms of implementation of these tariffs. It could be, potentially a complete rescinding, or it could be maybe a decline in the average effective tariff rate that is applied to all the countries from, say, north of 20%, which is where we are now, to something closer to 10%. But nonetheless, we think that is the most likely outcome, as opposed to maybe a Fed put or us getting towards reasonable valuation levels. This is a significant macro shock that we need to pay full tribute to.
What's your take on Scott Bessent and his role in all of this? He's the U.S. Treasury Secretary, the senior-most cabinet position related to the U.S. economy. He also has deep experience as an investor investor. He's led hedge funds and investment funds in his prior career. Thus far, he seems completely on side with a policy that is not supported by any mainstream economists.
Yeah, it's tricky to tell. I mean, I don't know Scott Bessent all that well. In fact, I might have met him once or twice throughout the course of my career. But at the very least, I think the concern for Scott Bessent is really about when it comes to debt financing, and it's certainly of the current. How large the deficit is in the United States, and if they do have other goals outside of tariffs, including rolling over tax cuts, how is that going to get funded? How cheap is that financing going to be? So I think with Treasury Secretary Bessent, a lot of his concern is there, and maybe tariffs are sort of a way to augment that in terms of revenue streams. I think that's sort of the mantra of the Trump administration right now.
Why don't we finish with the Fed? How does all this look to Jerome Powell? He told us a short time ago he does see inflationary pressures coming from the tariffs. The market believes the Fed will be required to cut rates much earlier in 2025 than had been the forecast before all this arose.
Yeah, so the market is terrible at forecasting nonlinear events, as we can clearly see right now. I think there's a lot more tribute being paid to the potential recessionary effects. Of course, we have to remember that recessions are typically disinflationary in nature. But in the very least, based on the comments we've heard from Chair Powell and some of the other Fed speakers, they're going to pay a little bit more tribute to the stagflationary effects in the near term, or at least pay more attention, I should say, to the price increase and what that means in terms of a stagflationary backdrop in the near term. So that means keeping rates restrictive, maybe holding off on easing until a couple of meetings from now. I think that is going to be the course that they chart going forward, not least since that core PCE is close to 3%.
Bipan, thanks a lot for being here.
My pleasure.
Bipan Rai is Managing Director and Head of ETF and Structured Solutions Strategy at BMO Global Asset Management.